Hi everyone, let's have a look at my low time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the CVD, because we had some bearish CVDs. We were looking for a move to the downside. We had bearish CVD between this high and the lower high, so a lower high on price but a higher high on the CVD, and also more locally between this high over here and the lower high created later that day, we had another bearish divergence for a move to the downside. Now the target for the bigger bearish divergence was the low over here, and for the smaller bearish divergence was the low over here, but of course the smaller one could have been extended because of the bigger one for quite a nice trading setup indeed. If we then go to the CVD right now that we have at the moment, we have some bullish divergences. So we have the low that has been made over here on Friday the 12th. And we have the low that was made yesterday over here, and between these lows we have a higher low in price but a lower low on the CVD. So if I now grab the AGGR chart over here, which is the CVD chart, you can find the link and the template in my Discord. Then let's first check the bearish CVDs, shall we? So we have then a lower high here on price, lower high on price, but on the yellow line we have a higher high, which is a bearish CVD divergence. And then more locally here as well, of which I actually have to go to the 5-minute, we had another bearish divergence going on. So we had a lower high over here, lower high in price, but a higher high in both the yellow as well as the blue CVD. So bearish divergences, these have already played out. And if I then go to the bullish divergence over here, then you can see we made the low, and with the low comes the blue CVD line, but then price is making a higher low, while on the blue line we made a lower low. So a bullish divergence at the moment on price, where the target would then be 27.6k. Now of course divergences, no indicator, no strategy has 100% win rate, but it is good to be aware of these CVD divergences. So if we then look at my scenarios that are also in line with this, then we have over here a wave 1 in the very bullish scenario, followed by a zigzag A, expanding flat B, and then another zigzag wave C to the downside. Now it looks more like a 3-wave structure, right? It's also difficult to count a 5-wave move to the downside, because this being a potential wave 4 in a 1, 2, 3, 4 and then a wave 5 is invalidated, because this move retraced too high, because this move retraced to the golden pocket, as you will see over here, which is not allowed. So the 0.5 is a maximum target for a wave 4. And of course you could say, hey, you know, it's been respected on the 30-minute time frame, but if I switch to the 15, then here candles closing above, it's just not something you like to see for potentially this being a wave 4, to be honest. But in this scenario we are looking at this to be a wave 1, then a corrective wave 2 to the downside, and then we would be looking for a bigger wave 3 to the upside. Currently this is an alternative scenario, mainly because of this wave 1, because this wave 1, it's very difficult to count a nice 5-wave structure in this wave 1, and it actually counts much better in a 3-wave structure. Now it is possible to count a 5-wave impulsive move in here, but it just looks very, very awkward. So that's the reason why a very bullish scenario is at the moment not preferred, and eventually I would be looking for more downside. But if we then go to the very bearish scenario, this one for me is at the moment also an alternative scenario and not a preferred scenario. So in this scenario, yes, we do expect more downside, because basically a correction has been finished in ABC. This is a wave 1 to the downside, followed by an expanding flat in a wave 2, and then we have a 1, 2, and then we possibly need another 1, 2 over here, because this retraced too high for a wave 4, as I have shown you. So this is then another 1, 2, 1, 2, and then a bigger 3 to the downside. But having a 1, 2, 1, 2 over here is very, very awkward, because if you look for a 1, 2, 1, 2 scenario, what I prefer to see is this being a wave 1, then a wave 2, then the second wave 1 taking the low of the first wave 1. But if this over here is the second wave 1 in a 1, 2, and then another 1, 2, 1, 2, like it's just 1, 2, 1, 2, 1, 2, you know, it doesn't make sense. So that is also why this is an alternative scenario. Besides, of course, we have these bullish divergences for some pressure potentially to the upside today. And if we then look at the preferred scenario that I have at the moment and what I'm looking for, then we have a 3-wave structure in wave W, which is an ABC over here, followed then by another ABC to the downside. So this 3-wave structure is then a wave C, or wave B has to move to the right, and then this impulsive structure is a wave C. That's of course the question. It could still be maybe somehow a WXY as well, but it doesn't really matter for the target area that we were looking for. We were looking for a bounce around this area over here, around the 1 to 1 and the 1.236 taken from the high of W to the low of A to then the high of B, which is between 26.7k and 26.5k, where I mentioned we have that daily naked point of control at 26,350. So if price is moving to the downside and we have these bearish divergences as well, where one of the targets is going to take this low, I think it will be very interesting to hit that daily naked point of control for then eventually potentially a move to the upside, right? Now, I also spoke about volume and proof of support. If price is moving to the downside with increasing volume, it's always good to wait for some proof of support, because just longing in this big dump to the downside, of course, we created bearish divergences the moment this candle was closed, but it is, as you can probably imagine, quite a risky trade because of the big move we had to the downside. And I personally would prefer to wait for a little bit of proof of support. Of course, you have your own strategy and your own plan, but proof of support can be, for example, a change in market structure where then you have an entry, a move to the upside, and then a retracement where you create some bullish divergences on whatever indicator you use or whatever you are looking for. At least some proof of support is, let's say, recommended when trading against high volume candles like these over here. So now price has moved to the upside, and if we actually zoom in to what price has been doing on the 5-minute over here, you can see it looks a little bit like a three-wave structure over here. You could potentially get an impulse out of it, but it looks a bit more like a three-wave structure, and now we've been ranging for a while. And I think what is interesting, and that's also why I never removed them, is that price retraced to my target box. So we had an important target box over here, basically deciding, are we going to go up or down? We lost the target box, moved to the downside to take the target for the bullish bearish divergence. However, the moment price is going to go through one of my target boxes, by the way, if you want to know how to make these target boxes, check out the card popping up at the right top of the screen, because I explain literally how to make these on your chart. So the moment we had this target boxes, we went through. Of course, we had a bit of an initial reaction over here with the wick, right? Touch the target box, move to the upside, could be a scalp, for then eventually continuation to the downside. But then I make the target boxes wide, which shows that they have been hit, because my usual color is either yellow or blue or maybe even green, I see. But then I make them wide because if price is retracing, then this same potential support area can act as a resistance area. And just look at that. We retrace to the upside, acting as resistance. Also, the additional resistance is if you go to the 30-minute, we had a 30-minute order block over here, basically filling this whole impulsive candle to the downside. After hitting this order block, we've now been ranging. Now, based on the bullish divergence and this particular scenario, eventually upside is expected. However, I wouldn't mind to actually hit the daily naked point of control, like actually hit it, if you know what I mean, because now we have a little bit of a gap between the candle and the daily naked point of control. So potentially, because this is a three-wave move to the upside, we might see a three-wave structure to the downside that is hitting the daily naked point of control. But all in all, the preferred scenario is to see a little bit more upside, where we still have these highs over here at 28.3k as an interesting area of resistance for potentially liquidity grab and then a move down, or the target box up here, which is sitting between 28.9k and 29.2k for then potentially that move to the downside in then a W, X, Y. And if we quickly measure the target for you guys to finish things up, we have a trend-based fib extension from the low of W to the high of W to the low that X has made at the moment. And then the target area for Y, the most common target area, is between 28.2k and 28.7k, which includes the highs over here at 28.3k, and also the target box is just above the 1.236, right? So we'll have to wait and see what happens today. We do have some news today at 5 p.m. Central East European time, so make sure you trade safe around that hour for whatever you do. If you are already in existing positions, then make sure you manage your trade well, and if you want to trade, make sure you have your plan, have your strategy. So I hope this video was helpful or valuable to you. Please check out the macro and high time frame video if you're interested, and for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.